nightly business report.
Good evening. Tonight, Sri Lanka's IMF-backed economic stabilization plan includes a 15% tax on foreign earnings and a 10% advance income tax on interest income as of right now. According to Transport Minister Bimal Ratnayake, Sri Lanka intends to strengthen aviation connectivity between Bandar Naik International Airport and Jaffna International Airport in order to increase domestic tourism. Both the S&P SL20 and the All Share Price Index recovered from earlier losses, while the Colombo Stock Exchange witnessed increases on the first trading days of the month. And in Q1 2025, US equity markets face uncertainty over the Trump administration's economic strategy, leading to the worst S&P 500 and Nasdaq quarterly results since 2022. Good evening and thank you for joining us. Starting today, Sri Lanka imposed a 10% advance income tax on interest income and a 15% tax on foreign earnings as part of its IMF-backed economic stabilization plan. These measures are designed to enhance government revenue and support long-term financial stability.
Sri Lanka has implemented revised tax measures, doubling the advance income tax on interest income from 5% to 10% and introducing a new 15% tax on foreign earnings. These changes, announced by President Anurukumar Dissanayake on the 18th of March, aim to strengthen government revenue and public finances. The 15% forex earning tax applies to residents earning in foreign currency, ensuring parity between domestic and international income taxation. However, Sri Lankans paying over 15% in foreign jurisdictions are exempt to prevent double taxation. To support pensioners and low-income earners affected by higher AIT, the Indian Revenue Department has introduced an exemption application process. Labour Minister Professor Anil Jayantha Fernando emphasized that while necessary, these measures are designed to improve fiscal discipline while protecting vulnerable groups. The revised tax structure is expected to enhance state revenue while aligning with global best practices on capital and foreign income taxation.
The Dhaka Stock Exchange, Pakistan Stock Exchange and Colombo Stock Exchange have signed a tripartite memorandum of understanding to strengthen regional capital market cooperation. The agreement aims to foster collaboration in technology development, human resource sharing, product innovation, regulatory coordination and investor protection across the three markets, speaking at the signing ceremony in Colombo. DSE Chairperson Mominul Islam emphasized that stock exchanges in South Asia, excluding India, face technical and resource constraints that hinder their growth. He highlighted that mutual resource sharing and joint investment in technology could help build stronger and more efficient capital markets. The PSX also stated this initiative will enhance regional cooperation and create new opportunities for investors and market participants. Key areas of collaboration include system development, digital transformation, knowledge sharing programs, cross-border listings, and broker partnerships. Sri Lanka plans to enhance air connectivity between Bandar Naik International Airport and Jaffna International Airport to boost domestic tourism and improve travel for northern residents, Transport Minister Bimal Ratnayake announced.
The Sri Lankan government has taken initial steps to increase flights between Jaffna International Airport and Bandar Naik International Airport, aiming to improve domestic travel. Minister Ratnayake highlighted that this move could greatly benefit residents of Jaffna who currently travel to Katunayake for international flights. The expansion of flight routes is expected to not only reduce travel time but also improve accessibility for both business and leisure travellers. He also emphasized that further development of Jaffna International Airport is central for the success of this initiative. Alongside these plans, authorities are considering amendments to aviation laws to better accommodate domestic air travel. Ratnayake pointed out that such changes could encourage private aircraft owners and aviation companies to enter the market, benefiting both businesses and passengers. Officials believe that these developments will open new opportunities in tourism and regional economic growth.
Sri Lanka's vehicle import figures over the past 2 months have met government forecasts, easing concerns about tax revenue shortfalls, according to the Department of Trade and Investment Policies. Director General M.K. Pradeep Kumar stated that revenue from vehicle imports has been on track since the import ban was lifted on 1st February. Through a final assessment will take months. The government has also amended regulations to streamline imports and addressed industry challenges amid speculation of tax cuts. Officials confirmed that vehicle taxes will remain unchanged in 2025. Senior economic advisor to the President, Duminda Hulangamua, said the government expects 300 to 350 billion rupees in tax revenue and emphasized that tax reductions are prohibited under the IMF agreement. Colombo Port is set to handle 7.76 million tours in 2025, with transshipment volumes expected to surpass 6.21 million tours, according to the Ministry of Transport, Highways, Ports and Civil Aviation.
Colombo Port is expected to handle 7.76 million TEUs in 2025, with a high-case scenario projecting up to 9.49 million TEUs, according to a report presented in Parliament. The report also estimates that total container handling at the port will exceed 10.57 million TEUs by 2030, with transshipment volumes reaching 8.7 million TEUs. In addition to container traffic, the port is set to handle 13.3 million tons of dry bulk, liquid bulk and general cargo in 2025, along with 13,998 imported vehicle units. In 2024, Colombo Port recorded its highest ever container output of 7.79 million TEUs, with Colombo International Container Terminal leading operations by handling 3.35 million TEUs. The port saw a total of 3,521 vessel arrivals during the year, reinforcing its position as a key regional hub. In early 2025, Colombo Port processed 1.26 million TEUs in just 2 months, with 1 million TEUs designated as transshipments. Meanwhile, the West Container Terminal is expected to commence operations by the end of the first quarter of 2025, contributing 20 to 30% of its final capacity, while the East Container Terminal is projected to be fully operational by the end of 2026.
Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange saw gains on the second trading day and the first trading day of the month, as both the share prices, index and S&P SL20 rebounded from the previous declines. Investor confidence appeared to strengthen, driving market momentum upward. For further insights, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you, Prasansha. At the start of the week, the Colombo stock market bounced back into positive territory, fueled by increased buying activity from retail investors. The banking sector and blue chip companies played a key role in driving the index higher. As a result, the all-share price index ended the day in green, rising by 120 points to close at 15,934. Milestone Corporation, Haley's, HNB Bank, NDB Bank and LOLC were among the top contributors to the positive movement of the index as well. Today's turnover also increased and ended the day at 1.9 billion rupees from last Friday's 1.6 billion rupee mark. This also lower than the monthly average of 2.1 billion rupees as well. The banking sector dominated contribution to turnover with 29%, followed by the capital goods sector and the diversified financial sector jointly contributed 35% of the overall turnover. Furthermore, top 3 gainers of the day were Nation Lanka Finance, Lankan Development and Asia Capital. Thank you.
Sri Lanka's construction sector grew in February 2025 with the PMI rising to 55.6, marking continued expansion. While infrastructure projects drive growth, firms stress the need for larger developments to sustain momentum. For further insights, we speak with Dimantha Matthews from First Capital Holdings.
Thanks, Prashansa. So today we are looking at the construction sector PMI, and we are seeing another month of expansion in the construction sector. So over the past few months after the crisis situation now in the construction sector, we are seeing some amount of recovery taking place, and in the month of February we are seeing another round of expansion in the purchasing managers index for construction, registering 55.6 index points. So as long as the index is above the 50 mark, it is an expansionary environment for the industry, and if it's below 50, it's a contractionary environment. So we are seeing a strong expansion in the month of February, and with it it comes with the new orders that are taking place. So the new orders are coming in the range of rehabilitation of roads and some of the irrigation system projects that are taking place in the industry. However, something to note is that in line with this expansion, we are seeing an expansion in the quantity of purchasers, and also the delivery times all are getting expanded. However, in terms of employment, we are seeing again another month of contraction here, simply because for the sustainability of the construction sector, we need more larger scale, long-term infrastructure projects to come in place. So until that happens, we are seeing a more conservative approach from the construction companies. That's why the employment levels are on a contractionary note. So we feel that at the moment things are turning positive, and the construction sector feels that over the next 3 months also things are likely to be positive, but they are still unsure of the long-term projects, how it will be faring in the industry.
Gold prices surged to an all-time high today, continuing their record-breaking rally as investors sought safety amid concerns over US President Donald Trump's reciprocal tariffs. Spot gold rose 0.1 to $3,125.69 per ounce after reaching a historic peak of $3,148.88 earlier in the session. US gold futures also edged 0.1% higher to $3,153.40 as market participants turned to bullion as a hedge against economic uncertainty. Investors are closely watching Trump's upcoming tariff plan, which is set to be unveiled on Wednesday and is expected to impact all nations. Gold has strengthened its position as a preferred safe haven asset, attracting buyers looking to shield their portfolios from potential volatility. With uncertainty persisting, analysts predict further upside for gold, with the next key level eyed at $3,200 per ounce. Oil prices edged higher today following US President Donald Trump's threats to impose secondary tariffs on Russian crude and take military action against Iran. However, concerns over the impact of trade war on global economic growth limited gains. Brent crude futures rose 0.3 to $74.98 per barrel, while US West Texas Intermediate crude climbed 0.3 to $7.170. This follows a strong session a day earlier where both benchmarkers settled at 5-week highs. Economists and analysts had predicted in March that oil prices would face continued pressure throughout the year due to US tariffs and economic slowdowns in India and China, even as OPEC Plus ramped up supply. A slowdown in global growth could weaken fuel demand, potentially offsetting any supply disruption caused by Trump's latest threats. The Sri Lankan rupee has strengthened slightly against the US dollar today compared to last week. According to the Central Bank of Sri Lanka, both the buying and selling rates of the US dollar have declined. Additionally, the rupee has appreciated against a range of foreign currencies, including Gulf currencies. Let's take a closer look at how the rupee is performing against major global currencies in today's market. Let's take a short break now. This is the Nightly Business Report. Welcome back. Union Bank has upgraded its UbiGo mobile banking platform, introducing new features to enhance convenience and simplify financial management for customers.
Union Bank has revamped its UbiGo mobile banking platform, introducing new features to enhance convenience and security for users. The upgraded app now offers instant savings and fixed deposit account openings, fast QR payments, pay management, bill payments, and card services. A key highlight of the revamp is the introduction of a video KYC facility, allowing customers to open accounts without visiting a branch. The app also includes a callback request feature, ensuring seamless engagement with the bank for customer assistance. Vice President of Digital Banking Manisha Fernando emphasized the UbiGo upgrade aims to enhance digital banking experiences, catering to affluent customers and Gen Z users. Union Bank has also set industry benchmarks, becoming the first bank in Sri Lanka to receive the ISO certification and PCI DSS v4.0 compliance for data security. With added biometric security and advanced controls, UbiGo ensures a safe and seamless banking experience, evolving to meet changing consumer needs.
Unilever Sri Lanka and the Industrial Development Board (IDB) have provided the second round of financing to 10 female micro-entrepreneurs as part of their ongoing 3-year partnership.
This initiative, launched in 2024, aims to support 60 women-led businesses by the end of 2025 through financial aid and skill development. This year, the program was further strengthened by a collaboration with the Women's Chamber of Industry and Commerce, offering additional mentoring and networking opportunities. At the handover ceremony, Mrs. Tilaka Jaisundara, Secretary of the Ministry of Industry and Entrepreneurship Development, served as the chief guest. IDB Chairman Ravi Nissanka emphasized that the initiative aligns with Sri Lanka's goal of strengthening local manufacturing and expanding exports. Meanwhile, Unilever Sri Lanka Chairman and CEO Ali Tariq highlighted the company's commitment to empowering women entrepreneurs as part of its broader sustainability agenda.
NDB Wealth launches XApp, a seamless digital investment platform aimed at simplifying investing and making wealth building more accessible.
NDB Wealth has introduced XApp, a seamless digital investment platform that eliminates paperwork and in-person visits, making investing more accessible. The platform offers a fully digital experience, allowing users to monitor, manage, and grow their wealth anytime, anywhere. To address market volatility concerns, XApp provides professionally managed portfolios through NDB's Wealth Expert team, balancing risk and reward for investors. Unlike traditional savings accounts that offer low returns of 2% to 3% annually, XApp grants access to NDB Wealth money market funds, which currently yield an annualized return of 8% as of the 6th of March this year. Transparency and security are key features of XApp, with real-time portfolio tracking, a clear fee structure, and secure transactions, ensuring investor confidence. NDB Wealth aims to position XApp as the go-to platform for young professionals and executives seeking better investment opportunities. As a fully owned subsidiary of National Development Bank PLC, NDB Wealth is committed to driving financial growth and innovation in Sri Lanka's investment landscape.
Island Leisure Lanka Limited Managing Director Chandana Amaradasa has been appointed as a board member of Teletext Holidays, one of the UK's largest travel companies. He becomes the first Sri Lankan to hold such a position in the British travel sector.
He becomes the first Sri Lankan to hold such a position in the British travel sector. Teletext Holidays, originally a teletext service before transitioning online, has been a prominent player in the UK travel industry since 1992. The company has won multiple accolades, including the Best Online Travel Agent Award at the British Travel Awards in 2018 and 2019. Amaradasa's appointment follows Teletext Holidays' evaluation of his work in promotions, destination campaigns and international events. Expressing his gratitude, Amaradasa stated that he is honoured to join the board of such prestigious company.
Dialog Enterprise, the ICT Solutions ARM of Dialog Asiata, is advancing enterprise-grade wireless connectivity, empowering businesses with high-performance networking solutions across various industries.
Dialog Enterprise, in partnership with Huawei, has launched Sri Lanka's first Wi-Fi 7 network at the Sri Lankan Institute of Information Technology at the Kingsbury Hotel. This deployment marks the beginning of a nationwide transformation, bringing ultra-fast, reliable and secure wireless connectivity to the businesses and institutions. Wi-Fi 7 offers speeds up to 4 times faster than its predecessors, utilizing 6 GHz spectrum, 4K cam modulation and multi-link operation for enhanced performance. At SLID, the new technology supports virtual learning, collaborative research and an improved digital education experience, while at the Kingsbury Hotel, it enhances guest connectivity with seamless streaming and smart room integrations. Beyond education and hospitality, Wi-Fi 7 has potential applications in healthcare, manufacturing and security, enabling advancements such as real-time telemedicine and smart factory automation. Huawei's Vice President of Sri Lanka Enterprise Business, Hao Sing Young, emphasized that Wi-Fi 7 provides industries with greater speed, capacity, security to meet digital demands.
The Ceylon Motor Traders Association recently hosted a visiting delegation from the Society of Indian Automobile Manufacturers for an evening of discussions and fellowship at the Hilton Colombo residencies.
The event, attended by key government and industry leaders, reinforced the strong ties between Sri Lanka and India in the automotive sector. Among the distinguished guests were Deputy Minister of Industries and Entrepreneurship Development Chaturanga Besingha and Board of Investment Chairman Arjuna Herath alongside senior officials from both nations. Discussions centered on enhancing Sri Lanka's automotive industry with a focus on component manufacturing and strengthening local supply chains. During their visit, the SIAM delegation also met with Sri Lanka government ministries to align policies and explore regulatory support for industry growth. CMTA emphasized its commitment to fostering international collaborations and advocating for the development of the local automotive sector.
Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks rebounded today, tracking overnight gains on Wall Street, but investors were cautious ahead of the April 2nd US reciprocal tariffs, while the Reserve Bank of Australia kept interest rates unchanged as expected.
Japan's Nikkei 2025 gained 0.7% on Thursday, while Topix was 0.8% higher. South Korea's Kospi surged 1.9%, leading the gains. Data on Tuesday showed that the country's exports rose, but came in lower than expected in March. Indonesia's Jakarta Stock Exchange Composite Index rose 0.6%, while Thailand's SET Index jumped 1%. Futures for India's Nifty 50 were largely unchanged. China's Shanghai Composite rose 0.6%, while the Shanghai Shenzhen CSI 300 Index gained 0.3%. Hong Kong's Hang Seng Index jumped 1.3%. Australia's S&P ASX 200 rose 0.8% before the RBA decision and was largely unchanged after the expected move.
The S&P 500 and the Nasdaq Composite posted their worst quarterly performances since 2022, as uncertainty around the Trump administration's economic agenda rolled US equity markets in the first quarter of 2025.
Wall Street's main indexes mostly shrugged off tariff uncertainty on Monday, with the Dow closing up 1%, the S&P 500 adding more than 0.5%, and the Nasdaq ticking down marginally. Still, Monday marked the worst quarterly performances for the S&P 500 and Nasdaq since 2022. The S&P slumped 4.6% in the first quarter, while the Nasdaq plummeted 10.5%. The Dow wasn't immune, slipping 1.3%. Many of the Magnificent Seven names also suffered steep quarterly losses, with two of the biggest losers for that period being Tesla, down almost 36%, and Nvidia, which dropped nearly 20%. Trump on Sunday said that this week's tariff announcement will include duties on all nations. He has already imposed tariffs on aluminum, steel, and autos, along with increased tariffs on goods from China. Monday's stock moves included shares of drug makers, which slid after reports that the FDA's top vaccine official had been forced to resign. Moderna dropped nearly 9%, while gene therapy companies Taysha Gene Therapies and Solid Biosciences fell 28% and more than 14%, respectively. In deal news, shares of rocket companies fell more than 7% after the mortgage lender said it agreed to a $9.4 billion acquisition of mortgage servicer Mr. Cooper Group, whose shares rose about 14.5%.
Aston Martin is set to raise more than 16.19 million through funding from its chairman and the sale of the stake in the Formula One team he owns as he grapples with delivery delays and depressed demand in China.
Aston Martin shares zoomed up around 12% on Monday. Investors got excited after the luxury automaker announced it would raise close to $162 million. It plans to do so through funding from its chairman Lawrence Stroll and the sale of its stake in the Formula One team he owns. Aston Martin may be British spy James Bond's car of choice, but that hasn't helped it in recent times. Delivery delays and weakening demand in China have hurt the British company, and it's been forced to cut 5% of its workforce. The equity raise is Aston Martin's 7th since Stroll took over 5 years ago. He's invested around $776 million in Aston Martin so far. His U-Tree consortium will invest a further sum of about $68 million by purchasing 75 million shares. Stroll said in a statement the investment should greatly reassure shareholders. The deal will increase his stake to about a third from just under 28%. It added that the sale of a stake in the Aston Martin Aramco Formula One team would help it realise a premium to the current book value of about $95 million. The automaker could also feel some pain from US President Donald Trump's tariffs on imported vehicles. It's forced Aston Martin to now forecast modest growth in annual car volumes. That's compared with its earlier forecast of mid-single-digit percentage growth. The US contributed more than a third of Aston Martin's revenue last year.
That's all from us on the Nightly Business Report today. We will see you again tomorrow with the latest updates in the business globe. Until then, I'm Prashansa Gunawardana. Thank you for watching and have a good night.